Today, we're going to talk about how to obtain financing. Ideally, you have this question in mind months before you actually need the funds you're attempting to obtain. This is a very important step because the amount of money you receive can change the trajectory of the business and unlock new avenues for research and development, an aggressive marketing campaign, or whatever else you need the funds for. But that all depends on the amount of money you actually have to spend. And one of the first steps in being able to obtain financing is to establish the reason for the loan. You should be able to explain to the bank what you're planning to use the money for. Are you going to use it to stock up on inventory for a big selling season coming up? Are you going to use it to pay your employees? Or buy equipment? Maybe upgrade your website? Or are you just going to transfer it right to your personal bank account? Banks typically look for your business to be strong in a majority of the following factors: credit, collateral, cash flow, time in business, industry, and current debt. Credit score and history. If you've repaid loans responsibly in the past, the potential lender will find out. And they'll also find out if you haven't. Banks can assess business and personal financial histories through a variety of avenues. Most loan processes begin with a credit review. Collateral. So what do you own that could cover the loan in case of default? And default means you can't pay the loan back. Most banks and lenders will require something of value to shield the lender in case something goes wrong with the loan. Typical business items that qualify as collateral include real estate, buildings, vehicles, equipment, inventory, and even accounts receivable. Cash flow. The more money your business is currently making, the less of a loan risk it'll be to the lender. Banks and lenders will not only look at the amount of profit you're bringing in, but also examine how you're managing it. If the cash flows out just as quickly as it flows in, that's not a good sign. Time in business. If you've been functioning as a business for several years, you're probably doing something right. Startups and newer businesses won't have time on their side, but a solid, executable plan for reaching milestones will go a long way toward evening the odds in the lender's eyes. Industry. What's the forecast for your line of business? If you had a successful local brewery last year, but 6 more are planning to open in the area this year, chances are they're going to cut into your business. And the banks might not want to take that chance. The easiest type of financing to obtain is a credit card. After your business checking account, this should be stop number 2. I'll never ever advocate for you to use your business credit card as a long-term debt instrument. It should always be paid off entirely at every statement date. But a credit card is really important to begin to establish credit for the business. A track record of good credit, timely payments, manageable debt will be important for you down the road when you're applying for a loan, a line of credit, or any other type of financing. If your business is less than 2 years old, if you have less than 2 years of activity to show the lender when applying for the loan, you're going to run into a lot of roadblocks, so just be prepared for that. Think about it. You're asking for a loan, likely several $1,000s, but how does the lender know that you can afford to pay them back the money that they let you borrow? They're going to want to see proof that you can generate income and cover your expenses and have enough left over to feed yourself and also pay any business debts that you have. Anyone can fake it for 6 to 9 months, generate a lot of income, apply for a loan for the next big purchase to scale the business, and then totally just burn out. Use that money to cover personal expenses and leave the bank high and dry. And they don't want to take that risk. So the bank wants to see at least 2 years of financials and a positive trajectory for the business. If you don't have 2 years of books to prove that you can pay your debts, the SBA is a great place to start. They offer loans for new businesses and businesses with a clear path for expanding that might not have easy access to traditional loans. Now, once you pass the 2-year mark, assuming you're at least on the path to profitability, you should have no problem shopping around at different banks to find the best offer. When shopping around, consider the annual fees, the interest rate, the terms, the setup fees, and any penalties for early payback. Make sure you do whatever you can to present the bank with prepared projections for the future and a clear plan for the funds you're requesting, in addition to your past financials showing growth and a disciplined business. If the bank is out of the question for any reason and you don't want to ask your friends or family for some money, there are online platforms and microlenders available as well. These are getting more and more popular these days, and these lenders are a little less concerned with what you're going to do with the money, or even if you have great credit. So they could be a good option if you're in a pinch. But know that the interest rate is significantly higher, so this should be one of your last resorts. Regardless of where you apply for the loan, your business is a closely held business. And unless you're a C corporation, the bank is going to want to see a decent credit score from you, the owner, as well as the business. So if your personal credit is a mess, start working on that immediately. Get a credit monitoring subscription, pay attention to the suggestions they have, watch your credit score increase, and it'll make a world of difference for your business down the road, should you need it. If you found this video helpful, we're real accountants and CPAs who work with hundreds of small business owners just like you every day. Check us out at engagecpas.com to see if we're a good fit for your business. We also have business courses available to help small business owners understand their business. They're for you to learn about your financials, your taxes, how to pick the right entity, tax myths, and everything else about your business. Learn at your own pace. Check those courses out on the Education tab on our website. You can also find us on Instagram at Engage CPAs.